Hi, afternoon. I'm Roelant Prins. I'm the Chief Commercial Officer at Adyen. I'm Dutch, and I'm going to talk about Adyen and what we're seeing in the market and with our customers on how we are trying to make payments more simple for merchants and consumers. But to start with, I love to be out here in London. I used to live here about 10 years ago. Royal Bank of Scotland acquired another company. We had another payment startup at the time. And I moved to London as part of this integration and worked in the bank for a few years. And at that time, payments was really frowned upon. It was the least attractive part of the banking world. Low margins, only issues, never upside. So typically the payments people were somewhere in the basement, very, very unattractive. And now we're here, everybody's talking about fintech, and payments is suddenly like the coolest thing on earth, which, well, more or less. Is super exciting. So a lot has changed, which is great, I think, and I'd like to tell you a bit what we're doing in that space. About Adyen, so these are some of the companies we work with to give you a feel for what we do. So we help merchants, typically larger companies, accept payments from their customers worldwide using any sales channel. We process currently about 35 billion in funds for our merchants, which tells a bit about the scale. We have about 300 people and growing quickly. We raised 250 million last fall at a 1.5 billion valuation, which we are pretty proud of, being a European company trying to conquer the world. If you look at friction and payment, so from my point of view, there's two sides to it. There's the consumer side and how you make things easier for consumers trying to transact, and there's the merchant side. And I'd like to walk through a number of things we're doing in both angles about removing friction. That says a lot about what we do. So to start with the consumer side, some context, we do a quarterly mobile payment index. So over that 35 billion we process, we're looking at how much of the volume we process specifically for retailers, so exclude the likes of Uber, etc., that are app only, but for retailers, what percentage of transactions are originating from mobile devices, iPads, tablets, iPhone, etc. Every quarter we publish it. We published one today, it's on our website, and today we see 30% of all transactions are coming from mobile devices. Worldwide, this was probably 15% 2 years ago. In the UK, it's more than that. It's almost 45%, 43% 1 quarter ago. iPhone is now the largest component, 35% of all the mobile traffic. And it basically means that 10% of all those payments we handle are coming from iPhone devices. You all know this, but they're super interesting figures and developments. Now, what does that mean? Of course, this, in my view, is one of the companies we work with who have been driving a lot of the frictionless payments for consumers. And there's nothing new about this story, but I think what's important to say, what Uber has done, we're now seeing that in retail, and this is what's driving a lot of the figures, and also a big advice to a lot of retailers out there. We're now seeing that there's more and more companies that are selling retail, physical products on phones and are really successful. So the Uber model, where we can help store car details and then make them available for one-click ongoing purchases, is evolving and is now moving into the retail landscape. And I think for retailers having specific offers, etc., this has a big future for the coming years. So that's one thing we're doing there. The other thing, which is around removing friction for consumers, is on social payments. So what we do with KLM, Air France, who are very focused on helping customers with queries, they're offering upgrades, ticket changes, etc., and are doing a lot of communication around social channels, Twitter, Facebook. We developed with them a payment link. So they're now sending people via Twitter a payment link or on Facebook to make an instant payment for an upgrade. And it works really well. People are making changes on Twitter without any other interaction and making the payment right there on the spot. Of course, one-click payment helps, but it's very interesting and very easy on-the-go way to make payments and interactions. Another area where we're spending a lot of time is on subscription economy. A lot of our companies we work with run subscription models. So Spotify is a good example. There's online dating, of course. There is all sorts of other retail products like beauty boxes, razor blades. Netflix is a company we work with closely. Getting your food delivered, you're seeing it everywhere in the world, as well as shoes, fashion-related articles, all based on subscriptions. And the friction there is, of course, once the payment fails, this customer is going to be gone. You want it to continue to run smoothly. So two things we're doing there, for example, around implementing things like account updater from Visa, which helps you once a card is expired to automatically update it without the consumer having to do anything. The other thing is we're making one-off type payment methods like Ideal, so Fortüberweisung throughout Europe, and we're turning them into recurring payment methods by linking a direct debit transaction to it. Then the last thing, and this is a bit about the future, what we're working on in terms of making things frictionless for consumers is around omni-channel. So we've developed our platform from being an e-commerce provider towards much more a global payment platform that also handles point of sale now. And that means that we can provide to the merchants one platform that handles everything. And one of the big things we're doing now is working with companies like this hotel chain, Citizen M, that are also here in London, to come up with a model where consumers only make a payment once, whether it's in their hotel at the bar or whether it's online. They do it once and we tokenize, which means we store the payment details, we link it to their tag, their hotel room, and they can use that for tap-and-go payments anywhere in the hotel, whether it's buying a beer, food, or checking out. One payment and you're done. And this is also what a lot of retailers are now looking at. They're a bit slower, but this is where we're going. Then looking at the merchant side, there's a lot of friction on that side. If you talk to any retailer, there's lots to be solved on the merchant side. Think about this. So for a lot of the online services nowadays, you have to register and provide a credit card to register for a service. Think about Facebook, think about Spotify. When you do that, typically you do a zero, people check your card, whether it's a valid card, yes or no. A lot of the issuers still have problems doing that. So typically, when you send a $0 request as a merchant to validate this card is active, what will happen is sometimes you get a refusal because the system cannot deal with it. Globally, this is a problem for a lot of merchants. What we are doing is we have a big data approach to payments, and we're looking at every country, every issuing bank, to see which of the issuers can support a $0 request and which can't. And we are able, on behalf of our merchants, to change the 0 into a 1. This sounds very geeky. However, it helps us get 5 to 7% more successful account validations in place for our customers worldwide. And this means 5 to 7% more successfully registered customers that will be making payment on a regular basis from that point in time. It's about getting customers on board. So you can imagine that has big impact for customers and removes friction because more people are successfully subscribed. Another area, if you talk to anybody in a large company, what's your biggest issue? What's your friction in terms of payment acceptance? And it's around refusals. 15% on average of every payment request big merchants process are refused. And this provides a distribution of the reasons for that. So it's, for example, insufficient funds. We all know what that means. That's only 25% of all refusals. The other 75% range from technical issues, risk-related issues, and other. Let's dive into one of them, because we are focused on helping merchants bring this down, and that's how we try to remove their friction. One of the refusal reasons we're spending a lot of time on is one that we can all understand really well, insufficient funds. Now, what you're looking at here is, again, how big data approach to payments helps optimize. This shows the distribution of the refusal reason, insufficient funds, in 3 countries. France, the UK, the US. And you see there's a massive difference in when that refusal reason pops up. So you see in France that by the end of the month, there's almost twice as many refused transactions for that reason than in the beginning of that month. Whereas in the UK, at the end of the month, it's lower. So what we're doing, working closely with our merchants that do recurring transactions, in helping them time when to charge the customer. And that easily gives them percentage points higher revenues, and therefore less friction. Then the final bit that we are working on, and that we've always been working on, is about making more people, enabling more people to make a payment transaction with our customers. And this boils down to credit card penetration globally is relatively low in a lot of markets. UK, US, France, card-dominated countries. If you go to a lot of other countries in Europe, Holland, Germany, it's much lower. What we do is we support 250 payment methods worldwide and make them available through a single integration. By making more people enabled to pay, there's more revenue. Installments, for example, in Brazil, 50% of payments in Brazil are made in installments. People buy a television, but also a 50 euro transaction, and they pay over 10 installments over time. Figure it out. So people are thinking when they're purchasing something, how much spending balance do I have the next 10 months? It's crazy, but it gives you 20% more revenue if you support it. So pretty key in Brazil. If you look at Europe, SEPA direct debit is now a common standard for pooling money from bank accounts. It represents for recurring merchants well over 30% of their payments, and is very popular. In the Netherlands, we use this, Ideal, all the time. It represents 70% of all payments. People in the Netherlands, but also in Germany, we're grown up and people say credit is bad. That's what you learn. So there is a payment method which is an instant payment, Ideal. It's like a bank transfer. It's like handing out cash, which is super popular. Everybody uses this. We're using a device like that to make a payment. In America, people think we're crazy, but in the Netherlands, we're like, this gives us trust. We want it. River Island recently launched with us in the Netherlands and added Ideal. I think they doubled their revenues in the country. China, big market for a lot of our customers. Alipay, as most of you know, is key. We see over 50% of all transactions in China being made by Alipay. So again, really a hard requirement to be successful in that country. So in summary, there's a lot of different things we're doing to try and help remove a lot of friction. There's still a lot to be done, and I hope this has given you a nice overview. Thank you.
So Roelant, a lot of companies wanted to get to the position you're in. There's a few of them in the building today. What do you think were the key things that you got right early on that allowed you to scale more quickly than other businesses?
There's a few things. I think for one of the key things we've done from day one, and that's, we're originally from the Netherlands, but from day one we've positioned and approached the market with a pan-European or global offering. So from day one, we went outside. Our first customer was not a Dutch customer, was a German customer. So from day one, we've gone international, and that's been a key driver because having the very international solution has made us successful. So I think what you see in a lot of, in the UK or in France or in the US, which are huge markets on their own, there's quite a few companies that focus on that market first and only after a few years start to look at new markets. We gone global from day one, and that made a difference, I think.
And you talked about using data to optimize the merchant's chance of getting that payment through. When I'm paying with one of these, what sort of data can you measure in real time based on some of the sensors inside here, some of your knowledge of me and my social network?
There's quite a lot of data. So we've developed something we call shopper DNA, which talks a bit about how we look at it. And I think the key thing is that we now have technology that enables us to do much faster algorithms to build a broader picture of a shopper. So whereas traditionally we looked at a transaction, we say, oh, what's the device? What's the email address? That sort of data related to the transaction. And then we would say, for example, is this a tricky transaction or not? Do risk analysis on it. By now, we can do much more faster. So we can see, okay, this email address, IP address, but we can then link that. So this email address, was it used before? If it was, which data was related to that transaction? And we built this web, so we have this huge network of data on one transaction, which means we can much more precisely recognize you as a shopper. That's good for managing risk, but it's also good to say, hey, we know you. We've seen you purchasing something in this store 3 months ago. Great that you're back. It's that sort of information. And a big need for retailers right now is all that data we have on mobile and in online is super valuable. If you look at in-store, there's nothing. You walk into a store here, they have no clue who you are. We can now combine that data. So by doing point-of-sale payments now in-store with the same infrastructure, you can now stick a card into a terminal, and we'll be able to do that, the whole networking, and we'll be able to tell to the retailer, this guy, he purchased online over the past few months for quite a lot of value. That's gold for retailers.
And do you see the long-term goal as Adyen replacing some of the credit card networks? Do you see, we have Jonathan from Visa in a minute. I mean, do you see Adyen trying to take that business?
No, I don't think so, because in the end, we're not inventors of new payment methods. What we are good at is using technology to make things more seamless, and that's what we've always been good at. So what we are chipping at is, the existing value chain that has developed over the years with old banking infrastructure, and then payment gateways will build on top of that, and then risk systems build on top of that, and we're replacing all that with much more modern, clean infrastructure. And I think that's more what we're trying to replace, and that's what we're doing.
Jonathan's relaxed, he's okay. Thank you very much, Roelant.
Okay.